at 60, you need 5 million every year to survive. So that will help you to walk back and say to yourself, if I'm contributing 18% and I have 30 years to retirement, would that be enough to provide, for that 5 million every year that I need at the age of 60? If the answer is yes, that means you're doing very well. But if the answer is no, the natural option for you is to take advantage of additional voluntary contribution. So AVC is there to help you to do several things, but the first thing is that it will help you to augment, your pension at the point of retirement. But beyond that, it will also help you to do several things, which I believe in the course of our discussion we'll also touch base on those ones. Really.
So what you are saying is that every employer is meant to mandatorily deduct 8% of the employee's salary every month.
Yes,
however, the employee can decide of his own to do more than the minimum of 8%.
Yeah, sure.
Why should employees do that? Why would you encourage people to do more than the minimum?
Okay, I think another angle to look at it is that if you look at individuals who face all types of risk every day, chances are that occupational hazard can happen, which could lead to some form of incapacitation, right? Somebody can, just take you and you're not able to walk again. Somebody can die, right? And it's also possible that you outlive your resources. So those things are things that happen every day. But what you find whenever you discuss with people is that we have this is not my portion strategy, right? So when people are faced with obvious risk and they're not ready or they're not prepared to manage it, the next thing is that it's not my portion, right? So the point is that you need to replace that is not my portion with something that is stable and sustainable, and that's what AVC does for you. So the interesting about AVC is that you can use it to do several things. You can use it to save for emergency fund. You can use it to save for specific projects like saving for your kids university education. You can use it to save to acquire a property. You can use it to save for so many things. But before we get into all that, the first thing is that if you decide to save, you are faced with a problem immediately. Where are you going to save that money? You have several instruments to save your money. You can save in a bank savings account. You can go and invest in the equity market. You can invest in government securities, etc. But the interesting thing about AVC is that for me, I would prefer that you save your money in an instrument that will give you several options. For example, you're saving an instrument that will give you investment return, right? You're also saving an instrument that will give you some sort of tax relief, right? So you're enjoying good investment return. You're also enjoying some sort of tax relief, and that's what AVC does for you, really. So if you're working and you want to save more, I will encourage you to save through AVC, because AVC will help you to grow your money by way of investment return. It will also give you some sort of tax holiday, which obviously I will explain in the course of our discussion.
Yes. There's no time. This is now we want to talk about the tax. Right. So talk to me about the tax benefit that employees will get if they move into the additional voluntary contribution or AVC, the tax benefits.
All right, so if you look at the pension law, the first one was passed in 2004. After 10 years, it was amended in 2014. So we are working with the Pension Reform Act of 2014. So pension contribution is tax exempt, for both employer and employee. So employers who are part of CPS will enjoy tax relief for every amount of money they contribute for the purpose of pension. That also applies to individual. So for AVC, if for example you decide to do AVC of 10,000 naira every month, right? In computing their tax, there is something called total taxable income, right? So they would have given you all your relief that you're entitled to, and you arrive at your total taxable income. So if your total taxable income every month is 100,000 naira, I decide to do AVC of 10,000 naira, that AVC will be taken away from your total taxable income. So rather than tax you at 100%, you will not be taxed at 90,000, right? So the tax rate will be applied on 90,000 rather than for 100,000.